The US government is officially shut down. The Fed rate cut is on board for this week, and gold and silver markets just crashed last week. There's a lot of volatility happening right now. And in this video, I'm going to break down what is behind what is actually happening right now between the gold and silver markets, but also the underlying factors of what everyone should keep in mind as far as the value of the US dollar, gold and silver, and also crypto markets moving forward here. Hello, everyone. My name is Rick Fronek, and this is a special edition of our gold and silver stacking Saturdays. And I did a lot of deep diving last week after the gold and silver markets crashed. And what I found out is kind of like went down the rabbit hole, so to speak. But I found out a lot of information that everyone should know. And that's why I have the special report here today to kind of share this with everybody. So I'm going to be sharing some clips, some video clips on some insight from Andy Scheckman, who was somebody who I highly recommend everybody follow as well, but also some insight as far as, what is all happening behind, why did the markets crash for the gold and silver? And there is some specific examples of who is behind it, but of course, nobody really knows overall. But I'm going to share with you why it happened, and then also moving forward with the Fed rate cut coming up this week. That's also going to create a lot of volatility in the markets, but also something that's going to impact the crypto markets as well. So I want to go ahead and start sharing this presentation here. So we're gonna cover that right now with the government shutdown. That in itself kind of spooks people. It's kind of like with it being, Halloween coming up this week. That's kind of, in line with the theme of this season. But also when the government shuts down, money gets tight and people panic, and some people actually, start dumping their gold and silver and also their crypto. And so that's where you've seen a lot of volatility in those markets too. But that's not the real reason behind that. But the Fed rate cut meeting is they're having their meeting on October 28th and the 29th, and they'll have their announcement on I have that as the 20th, but that should be the 29th. So whenever there's a pending Fed rate cut, the markets are going to be up and down anyways. Okay. So that always impacts the value of the US dollar, and also how other countries look at the US dollars being the reserve currency for the world. Okay. So that's where you see other countries basically buying more precious metals, in this case, which I've shared over the last couple of weeks with the increase in the amount of foreign, central banks across the globe stockpiling gold. Okay, and it has a direct correlation with the value of the U.S. dollar. Okay, as a reserve currency. And then I wanted to share this point. There's a gentleman by the name of Iman from Keystone Research Group. I was looking at a video from him and also a bulletin from him where he's done a lot of forecasting and predictions as far as the crypto markets and everything goes. But also, he made a comment that, he's predicting that the government resolution will happen shortly after the Fed rate cut announcement. Okay, whether they cut the rates or they keep them the same, there is certain, he's pretty certain that the government shutdown will end shortly thereafter. And he says when that happens, he says uncertainty will vanish, confidence will surge, and money will begin to flow again. And especially at this time of year with the holidays coming up and everything, this is something that is definitely going to impact the markets as well. But then also with some of the clips I'm going to share with you, this is very important. I highly encourage everybody to watch this to the end because there's a bigger picture that's not being mentioned at all by the mainstream media. And it's something that when you understand that this is not just the short term outlook on precious metals, but also the long term, as whereas what's going to happen with the US dollar, moving forward, even into next year. Okay, so I'm going to share some clips on that. And it's something that I highly encourage everybody to, reach out with if you have any questions, but then also I will include the links for the videos that I'm sharing uh, below the video here as well if you want to watch those specific videos in their entirety. But what I usually do, I want to just go over the gold silver ratio because we've seen it with the volatility of everything that happened with the markets crashing last week. We go back to when we started this presentation, or the gold and silver stacking Saturdays. In June of this year, gold was at 33.69 and silver was at 36. So we're still up. We had our highs here the week of October 18th, And then, this past week with the markets crashing down to 41.1290 for gold and 48.71 for silver, we're still quite a bit ahead of where we were 4 months ago. Okay, so even though people are panicking because, oh my gosh, the gold and silver markets crashed. Well, when you look at the grand scheme of things, we're still way, way, way above where we were back in June. Okay, so it's still a definite plus for gold and silver this year. But it's as far as people being concerned, I'm going to share some stuff with you here that's going to should hopefully put you at ease because as everyone knows, the uh, the bigger picture when it comes to precious metals is a long-term outlook, not necessarily the short term. Okay, so right now with the gold at 41.12 and silver at 48.71, the gold to silver ratio is 84.43 ounces of silver to equal 1 ounce of gold. So back in on October 14th, I'm sorry, October 4th, it was 80.91 ounces, and then even with the gains over in, when gold and silver hit their highs, it was still at 81.48 ounces of silver to equal 1 ounce of gold. So it's kind of, you see the fluctuation there. This is what it is today as of October 24th, close of business, was 84.43. And we still have a little bit of uh, a flow there, a range there as far as, how it's moving up and down. Okay. So this is something that I've talked about before. Uh, I was glad to find this when I was doing my research on what was happening with the gold and silver. I did find this. This is courtesy of Ryan Belafontaine of visualcapitalist.com. It's a chart that shows the decade of central bank purchases. Now, if you look here, this goes back to 2014 through 2024, and like I've always mentioned in my other previous videos, is that the big impact of the central banks from across the globe purchasing gold all was triggered by the sanctions put on Russia for the Russian-Ukraine war. Okay, so in 2022 when the Russian-Ukraine war was officially broke out, so to speak, uh, that's when all the central banks started stockpiling gold because the sanctions the U.S. put on Russia, that was like a red flag to them. It's like, okay, so if we do something that the United States doesn't like, what are they going to do to us? Okay, so that's why all these countries started stockpiling gold. And so this is a nice chart that shows if you go back to 2014. So this is, central bank purchases of gold. Okay, so in 2016, it was 394, 378 in 2017. And then even down in 2020, it was 254. Like COVID, this right here was a result of COVID. And then 2021, it's still pretty low, okay? But then here, after the sanctions put on Russia, you see how it just escalated. Okay, so 1,080. So you have, and these 3 years, it was up 104. It's a estimated purchase over the last 3 years are up 104% versus 2014 to 2016. So if you compare these 3 years to 2014 to 2016, that's quite a bit of gold. And so in 2025, so this has an H1 2025. Poland led with 67.2 tons, followed by Azerbaijan at 34.5 tons and Kazakhstan at 22 tons. And then China added 19 while Turkey bought 17 tons. So then there's a couple other countries here. So altogether, 23 countries grew holdings in the first half, underscoring broad participation. With central bank gold demand still strong, bullion offers a credible hedge and liquid diversifier for portfolios seeking resilience. So this chart shows you. I mean, I'm glad I could find this because it shows you the breakdown here. But then also this comment here with the central bank gold demand still strong. That's for the average everyday people like for you and I that are looking for ways to safeguard our portfolios, moving forward for our family and our future. Okay, so I did want to share that. Now, this clip I'm going to share here, and I'm going to watch it with everybody here. Okay, so when you had, gold dropping 5.5% and silver dropping, 8%, that was like a huge red flag. But what was behind it? Okay, it just doesn't. happen. Well, it did literally happen overnight, and that's what Andy Schectman kind of points out here when he's doing this. He's being interviewed by M Michelle McCory, and so I want to share this clip. Now, this is a little bit longer clip because they're going to talk about, what happened on, when the markets took a nosedive, and then also the underlying factors of who could possibly be behind it. Okay, so bear with me here because this is something, like I said, this is not edited. This is something. Hang on a second. So, so this is something that. All right.
The Real Story with Michelle McCory. Brushed it aside. And so there, look, rising gold has implications and implications for the United States, implications for the dollar, implications globally. So I think that there's a lot more to it than just what the mainstream is trying to talk about. And you sent me an article today that talked about the gold prices fell by 5.7% and making it the largest one-day drop in since 2013. And they call it a 4.5 sigma move. In other words, such a large move happens in one out of only 240,000 days in a normal world. What we saw in that kind of a drop is highly unusual. And when you realize it was dumped at the most inopportune time to create this type of sigma event, it starts to reek of desperation of creating a narrative where all of a sudden the one that you speak of, where everyone from Reuters to the New York Post is talking about gold. Maybe things are moving a little too fast for the big players, some of which who are still trapped in short positions that represent all but an existential threat to their survival if things get too far out of hand.
Look, I mean, there are a lot of players who would like to see gold maintain a lower level, not get that much attention as they're accumulating their positions, something that we've talked about at length and we'll get back to a little bit later on in this show. But let's focus again on this manipulation, right? And explain to our viewers how this could be done, because you've long argued, as well as others, that the gold and silver markets can be easily managed.
It's really key, by the way.
And this isn't theory. We've seen this happen. We've seen it happen over the years. I mean, there's evidence that major financial institutions, including JP Morgan Chase and Deutsche Bank, they paid hundreds of millions of dollars in fines and even faced criminal convictions for using paper contracts to manipulate the precious metals market through spoofing. And to our viewers that don't know what spoofing is, it's a trade where the trader places a huge buy or sell order that they never intend to execute, right? The goal is to trick the market to make it look like there's a massive demand or supply, and then cancel those fake orders before they're actually filled. That's just one example of how you can spoof the market. Like a trader could put in a giant buy order for gold, make it look like the gold demand is surging. Other traders and then trading algorithms see that signal, they rush it to buy. That pushes the price up, and just before those fake orders go through, the spoofer can cancel them, quickly sells their real holdings at the inflated price. It's a digital sleight of hand. It's illegal. We've known that it's happened, and we've known that it's happened by the big banks. JP Morgan paid a record $920 million fine for manipulating the precious metals market. Now, granted, in the grand scheme of things, compared to the profit that it made, not such a big deal. But basically, we know that this paper manipulation of the market can happen, right? So is that what you're saying is really happening now?
Yeah, a lot of people have been talking about, myself included, what's been going on in London. And to give you a snapshot, there's a guy on Twitter, his name is Bai Xingjun. I'm pronouncing that wrong. He's known as the Oriental Ghost, Oriental_Ghost. And he wrote today, I'll read it, I'll paraphrase it, I'll actually read it. Large quantities of silver are being transported out from exchange warehouses and sent to secondary silver vaults across the country, ensuring the daily silver needs of millions of industrial enterprises. At the same time, state-owned enterprises are taking advantage of the significant price pullback to actively purchase silver from international markets, ensuring the normal operation of the industrial system. China is intensifying reserves of various strategic resources and will absolutely not allow key mineral resources to flow out of the country, nor will ever compromise national interests to rescue a foreign company. Now, here's another thing. Eric Young, King Kong on Twitter, someone that I've been wanting to have you interview. I've interviewed him once before, and he's fantastic. He was just told, he says, I was just told that a 150-ton lease, or 4.82 million ounces, actually was leased by the London Metals Exchange from the Shanghai metals market, and that it was done so at grotesquely high lease rates for a very large tonnage. This would signal that borrowers who are short of deliverable metal and are willing to pay up to bridge the near-term needs in London are doing it because things are of that dire of a situation where it could really start to spiral and contagion can take effect. So again, when you see someone at this level who's been right for a very long time, and I have nothing but the highest amount of respect for him. To me, the bottom line is that the theme that we've been talking about, the tight physical, the high lease rates, the cross-region scouring for bars, this is real and well reported. And if you see 150 million tons from Chinese state banks and via the Shanghai Gold Exchange delivered to London to quell this problem, it would go hand in hand with knocking the hell out of the price by the same players to make people think the market is overvalued, that it's at its peak like it was in 1980 and 2011. And look, letting the price go up as high as it did pulled in an awful lot of speculators. And a lot of them didn't own gold, they just owned paper. And so when you dump massive waves of futures contracts into this thinly traded market, a lot of them sold without even knowing. They got triggered out of their contracts, which drove the paper price down. And maybe that's when you had London come in and say, we need to buy this silver at a lower price. Maybe it was London who came in and bought that silver after they knocked it down. I don't know who did it and who bought it. But I do know is that, to me, the whole point was to scare people away from buying gold and silver. That's what it really feels like to me. And this wasn't just another random correction. To me, it's as much as it could be as big as helping keep the LBMA propped up to maintain.
Oops, sorry about that.
Their system. But if there really is that much of a shortage that we've been hearing about forever, this game can't last, and supplies will keep shrinking no matter what amount of paper selling comes into the market at inopportune hours. And so I think, again, yes, it's scary to see a market move like this, but the fact that it moved like this is what, to me, makes it not so scary. It just reeks of desperation by big players who have been caught in a game where no one ever stood for delivery, and a continual rotation of paper promises has been what has allowed the fixing of gold and silver by the West forever. And it is now being challenged. Not just gold and silver, all of the world's commodities are being bought. And when we see 21 days of backwardation, where the normal market is called contango, where the price is
Okay, so I wanted to share that because it's, with the comment about there were probably two entities in particular that were responsible for the crash. Okay, in this case here, with what he's sharing there is if the London Exchange is actually leasing silver at a high rate, well, then obviously you want to have the cost of silver be at a lower rate when they go to have this happen. So that was something that at one point in this video, I'll have this link below as well, in the comments below and on YouTube here, because it's something that if you watch, it's like an hour and 20 minute, I believe an hour and 20-minute video or whatever. I did watch the whole thing, but I wanted to share that because I thought that was the key points from that video. But it's something that you get a lot of great insight from Michelle McCory there, but also then Andy Schectman, and her explaining, the process of spoofing. This is something that there is, whenever you see like gold and silver, go up a certain rate and then get knocked back down. That's usually something that's happening where there's other entities controlling what's going on with it. Whoops. Hang on a second. Okay. So in this, hang on a second. So in this video, he's got okay. So this is Andy Schectman, and he's doing this interview with VRIC Media with Daryl Thomas. Okay, and I want to share this because this is going to give you an overall picture of what is besides what's just happened with the gold and silver markets, but the reasoning and the logic behind what's going to be happening in the future. And Andy Schectman does a great he does a great breakdown, and I'm going to share 3 short clips from this video, but he does a great breakdown of why things are happening the way they are happening, and this is something to keep in mind moving forward. And if even like I said, be sure to watch this because this is probably more critical even than what I just shared with you before here. So what I'm going to do is I'm going to bring it up to this point in the video, and he does a really good job here. Okay. Sorry about this. Like I said, this is live, so why is it?
What website you were?
I'll try and edit. Maybe I want it. There we go.
So follow me here. You have a Secretary of Treasury who wants to preside over a new system. You have Stephen Mirren, who's at the Fed now as the advisor. The Mar-a-Lago Accord, devalue the dollar, bring back manufacturing. You have Trump talking about bringing back manufacturing, starting with tariffs. We've got to bring back manufacturing. And you know what, Daryl? If we don't, our kids are dead, and their kids are even more dead. We don't make anything anymore. AI is going to kneecap jobs. 60% of America has no college education. No one's got savings. We need to bring back manufacturing, period. Okay, how do you do it? The strong dollar, and Triffin's dilemma says you can't do it. No one will buy our stuff. The dollar's too strong. The cost of employment, everything, labor. We don't have any manufacturing anymore. We've sent it all offshore. How are you going to reshore everything? All right, I got you. So if Judy is right, first and foremost, and they do peg gold to the back end of the treasury market, first, you have to let it go much higher. Now, what has gold been doing? Stair-stepping, 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 outpacing everything, and no one notices it. And people look at Bitcoin and they look at NVIDIA. They don't notice gold, that it's outpaced everything. They don't notice that it was up 40% last year, over 50% this year. That's not sexy enough unless it's triple-digit gains or something like that, but they don't notice it. Now, I believe that they are going to let it go much, 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 much higher and then revalue it, even if they just market to market at that point. Right now, it's valued at $42.22 an ounce. James Rickards is publicly saying $24,000 an ounce. Mike Maloney, $10,000 an ounce. It's as simple as them revaluing gold, telling the president tells the Treasury Secretary to revalue gold, who tells the Federal Reserve. They're issued gold certificates. The Treasury issues the Fed gold certificates, who then every $4,000 increase in the price of gold, the Treasury General account will get $1 trillion free and clear. So if they moved it to 24,000, hypothetically, not only would it benefit every central bank on the planet who's been buying it, but in essence, it would allow the Federal Reserve to receive those gold certificates, for which, in theory, at least it says so in all the documentation, that they hold the gold, but it's not theirs. They're entitled to the fiat value of the gold. The gold belongs to the American people. They push a button, create $6 trillion, and give it to the Treasury, which devalues the dollar massively. Devalues the dollar massively. The higher the price of gold goes, it's not even the gold price. It's the devaluation of the dollar. That's what they want. The debasement. They're debasing the value of the dollar by letting gold and Bitcoin go higher and higher and higher and higher.
Go to website you
Oops, hang on a second. So I want to. Sorry about this. Like I said, this is not edited. Okay. So, with what Andy was saying there right there, it's like when you think about it, the overall picture of is, like with President Trump saying that he wants to bring back manufacturing in the United States. Andy did a great job explaining how they could go about doing that. Okay. Because, when, he also mentioned Mike Maloney and James Rickards or Jim Rickards. Those are two people besides Andy Schectman and Robert Kiyosaki that I always highly recommend people follow because, you know, he's, Andy is his own entity, so to speak. He has great presentations, but he's also following these other people like Jim Rickards and Mike Maloney because they also have a good feel for the pulse of what's happening in the precious metal market. So I did want to point that out. But also with the revaluation of uh, the revaluation of gold. Okay, like all these central banks in the United States, everything's based on gold being a value of $42.22 an ounce. Okay, so if they do revalue it to what it is right now at the 4,100, well, there you go. There's your increase in how you pay down the debt and everything. Okay, so that's why I wanted to share this because I think that's very critical. And then he's also gonna I'm just gonna skip it forward here just a few seconds because makes another good point right here.
So whether or not they do that, which I do believe they will, even if they just market to market, it's devaluing the dollar. That's what Roosevelt did in 33. Right there, he confiscated gold at $20 an ounce and devalued the dollar by 40%, making gold $35 an ounce. This would fit hand in hand with what? Triffin's dilemma. The dollar's too strong. Let's devalue the dollar. Let's let all of the world trade in local currencies. Look at what the BRICS are doing. Trading in local currencies over Enbridge, settling imbalances in gold. Gold is not replacing the dollar. It is replacing what stands behind the dollar, the treasury market or trust. All of these nations want to trade over a bridge network with their own local currencies, settle imbalances in gold. Look at the Shanghai Gold Exchange. They're building multi-jurisdictional vaults all around the Belt Road Initiative. They just finished one in Hong Kong. They're building one in Saudi Arabia right now. Saudi Arabia, who was a full participant in Enbridge, the technology that allows banks to trade cross-border free from SWIFT intervention. And then they're going to go all throughout the Belt Road, settling imbalances in gold, not in one jurisdiction, kind of like Venezuela asking the Bank of England, we have our gold back? No. So now it's going to be all over the place. All right. So back to what's going on here. We'll bring back all this gold. We are the largest importer of gold in the world since November. We've been a net exporter forever. All this gold's coming in. No one's asking who the hell's doing it. Who's buying billions and billions and billions and billions worth of gold and silver? Who? No one's talking about it. I really do believe that the Exchange Stabilization Fund is involved in this and taking possession of it on behalf of the Treasury Department, not having to get congressional approval because it's for national security. But none of that even really is relevant. So, Julia.
Okay. So that was another key thing that I wanted to, and then there's going to be one more clip here, and then I'll be wrapping everything up. Okay. So this is, yeah, I, like I said, I wanted to share the most important points from Andy Schectman. And this is a lot of the stuff. I mean, I spent hours and hours and hours going through stuff, trying to find the best stuff to share with everybody. And this is what I came up with on all of these. Sorry about the commercial.
Were your words?
Dollar. Now let's put it all together. How do you bring back manufacturing? I know you peg gold to the back end of the bond market like Judy Shelton is going to happen next July 4th. You bring it back at zero upfront borrowing costs. How do you sell your product to the world? You give up on the reserve standard and you massively devalue the dollar by letting gold and Bitcoin go to the moon. And that's exactly how you do it. Now, in essence, Trump gets up on stage and says, we screwed up a good thing. We used to be the world reserve currency that kept the prices of things we buy cheap, that kept our asset prices high and interest rates low. However, things have to change or our children have no future. Now, the only side effect I can see of all of this is universal basic income for a couple of years, because if you do not own assets in this environment, they have every intention of destroying the value of the dollar to reshore manufacturing. And someday he would say, we have a future. We can grow ourselves out of this problem. We can be the engine of growth again, of manufacturing, of ingenuity. Because if you're not working in Wall Street or in Hollywood making movies or in California with IT, where are you? What is the future of your industry? We must bring back manufacturing. There's nobility and honesty in that. But the only way to do it is to give up on being the reserve standard. Let every other country trade their own currencies and let gold be the arbiter of value. Honest to God, in my heart, I believe that is what is happening right now. So this volatility we saw in gold, which is right back to where it was, means nothing. And yes, you should cost average, but I do believe when guys like Jeffries or companies like Jeffries says 6,600, when Gundlach says 20, the Bond King says 25% gold's not too much. When Michael Hartnett says 20% of your assets in gold, when all these stuff and Morgan Stanley.
Build a website you love.
It's this. I like his passion. That's why I wanted to share it too.
Really figure that's what they're telling the public. So yeah, this is the debasement trade, and the theory is you stay in dollars, you're destined to go broke.
Yeah. And I'm glad you brought it back to like the common person and how they're impacted. Because I imagine you devalue the currency significantly, you could pay higher wages, even though those wages won't necessarily preserve your purchasing power. And so you mentioned that we may have some form of universal basic income. And so just want to get some more you elaborate a little more on that.
Yeah, and I wonder if I wrote this down. I read something last night. I'm not in my studio today because I got some people, workers coming here. So I wrote down some notes, and I don't know if I remember reading this last night. I don't think I wrote it down, but basically what it said was that the rise in gold is massively outpacing people's increase in
It's kind of cool.
pay. And it's like doubled in the last 18 months. And it's like the most ever, where I think the average wage in the country was like $36. So it takes 120 hours or whatever to buy 1 ounce of gold. It's the largest discrepancy ever. Gold is outpacing income.
Okay, so I'm gonna leave. Oops, sorry. Um, So I want to go, I just want to, this is, okay, I'll include this video below as well. I highly encourage you to watch this in entirety too as well. See what Andy Schechtman there, this was a clip where I've heard several people, James Rickards, also Mike Maloney, and Robert Kiyosaki has more or less said it, but I haven't heard a video where he said it specifically. But he's alluded to this as well, what the ultimate game plan is for the US dollar. Okay. And this is something that's important. And if like everybody makes the same comment. Okay. Anybody who's got a pulse on any type of precious metals, oil, real estate, what have you, they all say that you have to have physical real assets. Okay. And so when Andy made the comment about a universal basic income, uh, that's, if you don't hold physical assets, in this case here, they recommend some form of gold or silver, okay, or both, whatever you can do. And that's where I did do a video where I shared how to where you could buy incrementally. That I just posted this 2 days ago. As far as being able to incrementally buy silver and gold, even if you can't, because I'm sure not the average person watching this has $4,000+ to go buy an ounce of gold or what have you. Okay. So this is a way that you can incrementally purchase gold and silver. And even if you do a little bit at a time, it's going to benefit you in the long run. And, like he made the reference to all these, like JP Morgan and all these different people saying that they now recommend people have 20% or 25% of their portfolio be precious metals, gold and silver. Okay, so this is something that you go back 6 months ago, people would still be telling you 8% or less. Okay, so it's showing you the value of the precious metals, and that's why I'm so passionate about sharing with everybody, because this is very important. And it's like even if you do a little bit right now, a little bit at a time, a little each month, you're going to protect yourself, and you are always going to have the value of gold and silver. It will never ever lose its true value because it stood the test of time. It's the only true real form of currency. So I want to share this and then we'll wrap everything up. So this was an article that this is actually from Jesse Colombo from Money Metals. He says, how to know when the precious metals pullback is over. So I just broke out a clip. I'll have this link below too if you want to read the full article. Gold only broke out of this cup and handle formation in March of 2024. So here's the cup and then here's the handle formation. So it's breaking out in March of 2024 right here. Okay, so here we are now in 2025 where it's, hitting its all-time highs. Which means the current bull market is just 1.6 years old, so a year and a half old. That is still very young compared to past secular gold bull markets, such as the one in the 1970s that lasted 9 years and the one in the 2000s that lasted a little over a decade. Okay, so we're a year and a half into this bull market. And when you compare it to the last two large bull markets in the 70s and 2000s, we're nothing. That means the forecast for this is going to still be going higher. Okay. So I fully expect the current bull market to last at least a decade, which means it's only getting started with much more upside still to come. So I did want to share that. Um, and, so this is something that, like I said, I'm really passionate about sharing this with people because I know everybody does not have time to scour the internet and follow every single guru. I don't, I try to follow a set group of people because I know I've been following them for years, so I know what they're sharing. I've seen what they've shared come true, and that's why I keep trying to share this with everybody here and doing my best to share. I shouldn't say try to share it. I am sharing it. Uh, but if you have any questions, or if you, I do have a wealth strategies presentation that I like to share with people because it gives a nice overview of, why it's important to save in precious metals. And also, it shows you ways that you can save. So if anybody ever wants to reach out for a private Zoom presentation or something, or if you're somewhere here near Galena, Illinois, or whatever, I can meet you in person or do it for your business. That is something that I do offer from my Work Smarter for You and Silver Gold Solutions business. That's what I do offer is uh, private wealth strategies presentations for small businesses or even larger businesses if you want. But I do have an in-depth thing that I go over, which is usually about an hour and 15 minutes. But if you ever want that, please reach out to me at rick@silverandgoldsolutions.org. And for anybody who's watched this video to this point, I will say this, make sure you subscribe or comment. When I'm the night before Thanksgiving here in the United States, so that's November 26th, I believe, is the Wednesday before Thanksgiving. I'm going to have a drawing, and anybody who comments on any of my videos between now, so today, between now and November 26th, anybody who comments on my video, your name is going to go into a drawing. Okay, so it's great to see people like the videos, and I appreciate that. And definitely anybody who subscribes. I do appreciate that as well. So if you subscribe or comment on any of the videos between now and November 26th, your name's going to be put into that drawing. I'm going to do a special drawing and have a really, really, really nice giveaway for somebody. Okay. So I appreciate everybody's time. I hope you really got some great insight into this because, like I said, let me pull up let me see. Oops. All right, well, I'm not going to pull it up again. But with everything that I shared here, it kind of ties everything in. So not only is this gold silver crash that happened last week, or if you want to call it a crash, um, that's not the end. Okay. It's like there are entities and powers that be that do control things behind the markets. It's like the mainstream media is trying to tell people that it's just people selling off all their gold. Okay. And that's why the markets crashed because there wasn't the demand for it. So people are selling it. So it's driving the price down. Yeah. I'm sure there are quite a few people who were selling their gold when, they realized that they had made exponential gains, which more power to people. That's the whole point of saving or investing in something is when you can actually capitalize on the gains that you have. So that maybe be a certain percentage, but in the grand scheme of thing, that's probably maybe 2% versus the 98% with what Andy Schectman was talking to Michelle McCory about. So I wanted to I really, I hope everybody got some insight from this. And then the outlook that, Andy gave about what's going to happen he's talking about Judy Shelton. She had said in her book, but also in an interview, he had asked her that, where does he see the US dollar going, or as far as, and basically she said that, on July 4th, on the 250th anniversary of the United States of next year, so July 4th, 2026, Trump was going to make this announcement. And so kind of bookmark this, kind of keep this in the back of your head. So if that does happen, and at that point, it'd behoove everybody to have some form of gold and silver because of that direct correlation, whether it's gold or silver, you're still going to be protecting yourself. If that does happen on July 4th of next year, then come back and say thank you that you saw this video and I shared it with you. I just want to see people succeed. That's my passion is I don't want to see people go through turmoil with their family and worry about how they're going to pay for things and whether do a little bit at a time or whatever you can do. Just, keep that in mind that between now and the end of the year and then into next year, if you can do a little bit at a time, that would be great. And like Andy Scheckman also made the reference to Bitcoin there too. So they're going to be letting gold and Bitcoin go through the roof. And then when this all comes back, to them back in the U.S. Treasury to buy gold, that'll all have a huge impact, and it kind of ties everything together. So I hope everybody got some great insight from this video. I really appreciate your time, and if you have any questions, reach out to me at rick@silverandgoldsolutions.org. I'll have the links for all these videos below in the comments section here on YouTube, and then also some information on the wealth strategies presentation from 7K, and then also how you can get in touch with me as well. So thank you very much for your time. I wish everybody my very best, and just with everything coming up this week with the Fed rate cut announcement, and then probably close nearby the resolution to the government shutdown. The last 2 months of 2025 it's going to be up and down, but if you can do what you can or position yourself where you can, you'll probably have a little bit of peace of mind. Okay. So thanks everybody for your time. We'll talk to everybody again soon. Take care.